Hey everyone, welcome back to the channel, your number one source for income-oriented investing. It's time to go over the entire high-yield, income-oriented landscape on the US stock market. So all the funds are going to be listed on the US stock market. Before that, let's just take a look at what the stock market has done in the last month. For reference, I'm filming this on November 11th. So if you just take the SPX, you could just Google SPX. It's on a tear. I mean, Trump won. The markets are absolutely in a frenzy right now. Super huge bull run going on. The SPX, the S&P 500, actually just passed. I'm looking at it now. 6,000. Absolutely incredible. The NASDAQ 100, the NDX, even better in the last month, up 4%. So it's been absolutely a crazy run. Even crypto, everything is just going up and up and up with the Trump win, which is not really surprising. So let's go over the entire income landscape now. Before that, I like to thank the sponsor of this video, good friend of the channel, our friends at Curve. So remember, Curve has single stock ETFs, and they also launched a brand new Tech Titans ETF, which is growth and a little bit of income, the KQQQ ETF. And in case you miss it, I do have a Q&A with Howard, the CEO of Curve, discussing how Curve single stock ETFs are doing versus YieldMax, why they're performing in a certain way, and we also talk about the new ETF as well. So I highly recommend you watch the video if you're interested. So now let's move on and let's go to the diversified funds. We're going to start with the S&P 500 ones, then the NASDAQ, and then the Russell 2000 alternative, etc., etc. So we're going to start with JEPI, the biggest one in terms of net assets. The latest distribution at 37.5 cents, a little bit lower than last month. You have Bali. And by the way, these first ones here, part of the S&P 500, they're not exactly the S&P 500. They're S&P 500 based. So you have Bali, which I feel is probably the most superior one in terms of returns versus JEPI and other S&P 500 stock picking covered call ETFs. Latest monthly distribution a little bit lower. It's not not really a surprise. Volatility has been pretty low, and it's hit rock bottom right now. When the markets go up and up and up, volatility is really, really low. Just look at the VIX to see. Next one is. Sorry about that. Next one is the Invesco S&P 500 equal weight covered call ETF. So if we look at the distributions, then there's now 3 of them, I believe, that are out. Yeah, so very, very consistent. We're looking at about a consistent 9% yield or something very similar to that. So in case you're for some reason interested in an S&P equal weight, I would always prefer the market cap weighted, but just in case, we have an option from Invesco here. This is the RSPA ETF. Now moving on to the pure S&P 500 covered call ETFs. You have GPIX, which is a Goldman Sachs one. So a competitor to JEPI. My opinion is that it's superior. And the distributions for some reason are still not updated, but they for October, even November, November is not there. But I believe they're pretty similar to the last couple of months here. You see that it's very, very consistent distributions. You're looking at an approximate 8% yield with GPIX, probably a bit lower now. We'll have to see if GPIX increases their distribution. But this is a perfect basic option if you want to capture a lot of the S&P 500. You don't mind having a little bit lower yield, and you're obviously paying a really low expense ratio, a really low management fee of 35 basis points here, which is 29, I believe, until end of the year. Next, we're moving to SPY. So this is, if for those of you who really, really love consistent monthly income, this is one of the best ones. You're looking at a very consistent, approximate 12% yield. Latest distribution is not disappointing, just under 52 cents here. The November one, okay, they declare in the middle of the month. That's why it's not declared yet. Should be declared next week. Moving on to IVVW. This is the lowest cost S&P 500 by BlackRock. Same guys who do Bali, but it's the pure S&P 500. It's a 1% out of the money call every single month. So it's a rinse and repeat strategy, which gives up a lot of the upside of the S&P 500, but you do get quite a bit of income. If we look at the latest distribution, a little bit lower. Again, not really surprising. Volatility is lower at 62 cents here. Still pretty high distribution rate here with IVVW. Moving on to the daily option ETFs, you have WDTE, which used to be called JEPY, JEPY. They renamed it to WDTE. So this one has weekly distributions, and it's a little bit higher than the last week here. You see that here. This is really for those of you who want absolutely maximum income and you like weekly dividends. If a total returns a little bit more important to you, you like the daily strategy, SPY-T might be more convenient for you. You have less yield at 20%, but it's a very consistent yield because they target 20% a year. So the monthly distributions are really nice and steady, nice and even. Next we move on to XDTE, the top performing S&P 500 covered call ETF from Roundhill. And again, this one too has been a little bit, it should be a bit lower next week. So I'm expecting a lot of these daily covered call ones to be a little bit lower in the coming weeks and months because volatility is low. So XDT is still by far the top performing one, even better than SPY or IVV. It's actually outperforming the index. iSPY second place in terms of total return, doing really well. You guys see that Roundhill came out with the chart where they compare XDTE versus iSPY versus the SPY versus SPY-I. So top place in terms of total return was XDTE. iSPY was number 2. Number 3 was the SPY or IVV. Just the regular VOO, right? The Vanguard one, the regular S&P 500. So iSPY doing really well. This is the lowest fee daily covered call ETF, but for some reason XDTE just still has the edge over it. Really love those weekly dividends on those, but this one is monthly. And the latest distribution, why isn't it showing up here? Very strange. I just refreshed and now it's showing up. So the latest one, 37 cents, a little bit higher than last month. So you could see that the monthly distributions can vary greatly, and it's going to be based on volatility, by the way, guys. So whenever you see these jumps and these changes in distributions, it's not that there's anything wrong with the fund. Remember that these distributions, the funds that don't have any target distributions like SPY-T or SPY-I, especially the daily ones, they could have very big swings in the distributions. It's because of volatility. That's why. And then you have a newer daily option one, which is T-SPY. I believe they're also planning on coming out with the Russell and NASDAQ one as well. So this one also, latest distribution, a little bit lower than the last month. We're definitely going to keep an eye on this one. So I know there's a lot to choose from. In case you missed it, make sure to check out my Great 11 video where I talk about all the top buy and hold diversified index-based covered call ETFs on the market, which a lot of them are here. So moving on to the NASDAQ ones as well, you have QYLD, which I believe is heavily outdated. I don't see why anyone would want to be in QYLD with all the great options we have now, but I will still keep covering it. So the latest distribution, you see that here at 18.3. So they're steadily going up a little bit more lately. That's because the net asset value is going up very slowly. But of course, QYLD pretty much underperforming a lot of its competition because QYLD does not capture any upside. It forfeits pretty much all the upside for the maximum premium, as you could see here. And then they just, I said this a million times. You guys know by now how QYLD works. I don't see why anyone would want to own QYLD because of all the great options I'm going to talk about right now. So you have JEPQ, of course, which is JEPY's NASDAQ twin brother. So it's going to have obviously a little bit higher yield than JEPY because it's the NASDAQ. Remember, this is not the entire NASDAQ. Latest distribution a little bit lower at 49 cents here. Moving on to the Goldman Sachs one again. This one is pretty much GPIX's brother, or sister, the NASDAQ 100. And again, for some reason, they are The October and November distributions are not here, but it's you're looking at pretty much very, very steady distributions and about 10% yield with GPIC. Perfect if you want a basic option. I would say JetQ and GPIC are the ones if you really want something basic with a low fee. But obviously, if you want higher yield, there's better options. There's QQQI, which is from NEOS. You're looking at a very consistent 14% yield here. Latest one did not disappoint. Just under 61 cents. So QQQI, SPY, very, very, very consistent distributions. And last but not least, of the non-daily, the regular monthly covered call ones, you have QQA, which is by Invesco, the guys who actually manage QQQ and QQQM, the NASDAQ 100 index. So you're looking, this is more or less seems very, very, very similar to GPIC to me. You're looking at an approximate 10% yield, very, very consistent monthly distribution. So I think this one here, QQA, its biggest competition is really GPIC. That's the one that it reminds me of. Moving on to the daily ones now, the ones who do daily options. Of course, you have QQQY for those of you who want absolute maximum yield, maximum income. And these are weekly distributions now. Pretty consistent actually on a week-to-week basis here. 26 is the latest one. I do expect them to go a little bit lower in the coming weeks because volatility is really, really low right now. If you like the defines, if you like daily call spreads, this one here, you have QQQT, which is the same thing SPY-T does, but on the NASDAQ 100. And again, this targets 20% annually, which translates to basically very consistent monthly distributions. And then, of course, you have the top performing one in the NASDAQ 100, QDTE, the one I own personally, a crap ton of. You guys know I love this one. Cracked 500 million AUM. The latest weekly dividend was about 26 cents. I expect that to go way lower next week. It should be typically declared every Tuesday night on their website. Continuing on with the daily, last but not least is the ProShares one. IQQQ, which is basically the same thing as iSpy, the same fee, the same everything strategy, but on the NASDAQ 100. And again, with this one, monthly distributions that are going to be very erratic. You see here a big drop from the last month, right? You see big variations in the distribution. So that's it for the S&P, the NASDAQ 100 index-based covered call ETFs, which I feel are really the two best indexes ever. Let's look at the Russell and the crypto and alternative and the closed-end fund market now. All right, Russell 2000 small cap stocks. Here's a few options. This is what I feel is probably the best basic one. If you want a basic low fee one, IWMW by iShare. So this is very similar to what IVVW does. Same exact thing, except it's 2% out of the money instead of 1% out of the money. And obviously it's on the Russell 2000 index instead of the S&P 500. So very high monthly distributions here. I think the yields on this one and even IVVW, they're definitely over 10%. They're probably more in the 12 to 15, 16% range, even higher. But, this is 2% out of the money. So you're basically giving up 2%. You're only capturing 2% of the upside of the Russell 2000 every single month. That's a better way of explaining it. If you want something a little bit with consistency, again, NEOS, my opinion, their specialty is very, very nice, consistent monthly distributions, nice and high, still at 62 cents. So you're looking at approximately the same yield as the NASDAQ one, but maybe a little bit higher at about 14.5% yield here. Moving on to the daily ones now, you have IWMY. Again, if you want maximum income, this one pays weekly now. Pretty consistent, in the 30s, 40 cents here. So very, very high yield. You could see that 50% yield here. Then you have RDTE that's been doing pretty well. It's still kind of early to tell. This one is really, really new. Has it been out for even a month yet? Maybe a month. So the latest weekly distribution, 26 cents. You see that here. I can't wait to see if this one is actually going to start beating the Russell 2000 index, just like QDTE and XDTE are doing. If RDTE is really beating the Russell 2000, which would be IWM or IT. What's the Russell? Whatever it is, the Russell 2000. I know Vanguard has one, ITWO, I think it is. Anyway, if RDT is also beating the Russell 2000 index, I mean, it's quite obvious to me that the formula, the covered call strategy and formula that Roundhill has is the best. I could really say that. Well, when I say the best, I mean best by if we're considering total return. Last but not least, very new as well, ITWO. You got the ProShares one, the Russell 2000. Did they even declare the first distribution? Yeah, they did 66. So I don't know what kind of yield that translates to. So 66. Let's just do it real quick here. So 66 times 12 divided by 43.24. So about 18%. So very high yield as well. But again, you're going to expect, just like iSpy and IQQQ, erratic or, variances in the monthly distribution. So a lot of great options, even for the Russell now, guys. We're spoiled for choice. You have ProShares has all three indexes. Roundhill has all three. Of course, Neos has all three. Defiance, you have all three with the maximum income ones. You don't have the Russell 2000 for the target one yet. You only have SPY T, QQQT. The Russell one didn't come out yet. I don't know if they will come out with it. But anyway, lots of options for the Russell as well if you want to add some small cap exposure to your portfolio. Personally, I like the big cap, the S&P and the NASDAQ better. X funds, moving on to more, this is the only one that does daily options and has global exposure. So I've been following this one very closely. It has really, really high yield. The latest distribution, just a tad lower than, it's only got 3 months of dividends here, but very interesting because this one actually has basically all the indexes. You could see it has Russell 2000, the S&P 500. It has this ETF here, which is basically VIG dividends. It has international stocks. It has QQQ. So it basically is just a mishmash of all the very popular US indexes with daily spreads, and even has some more funky stuff like Argentina and India. So this is really, just like the name says, really the first global covered call option. If you really want to add global exposure, you want like a super all-in-one that has the whole world with daily spreads, this is definitely an option now, GIAX, with very, very high yield. Moving on to alternative fixed income niche stuff now. Of course, there's SVOL, which is still awesome. Definitely still part of the Great 11. Very high yield still. And again, it seems like SVOL and Simplify are making some changes. What I've noticed is that now they have a crap load of IVV in here. So basically what's been happening, what I've been observing is they keep on reducing their short dated government bond exposure because rates are getting cut. So the yield is lower on that. They're still doing their VIX strategy, of course, with this. That's still the main strategy of the ETF. But the issue for them is, what do we hold? What do we put the cash in that we need to actually do the VIX strategy? So at the beginning, it was mostly all short-dated government bonds. But now it looks like they still have, right? They still have bond ETFs here like AGGH, Buck, CDX. They have mortgages, municipal bonds, intermediate. But I noticed that they have a big chunk in IVV now, which is literally the S&P 500, which I believe they're holding just to write calls and puts on it. Call and put spreads. That's maybe what they're doing. But I actually like that they're holding S&P 500. So it basically, SVOL is kind of like owning almost an S&P 500 in my opinion, with some fixed income exposure as well. So yes, the distribution has been reduced from 30 cents to 28 cents. It's still 28 cents. The latest one is still 28 cents. Yeah. And I believe they also reduced the management fee, or the MER. They were able to reduce that a little bit. Simplify actually emailed me about that, notifying me. Obviously, they wanted me to share it with you guys. So a little bit lower fee. So again, SVOL definitely part of the Great 11 that you could buy and hold forever. Moving on to Yield Max, of course. Yield Max, we know that YMAX is the all-in-one with the weekly distributions here. I personally have MSTY, and boy, am I happy I have that one instead of Maxi. I swapped my Maxi for MSTY. It's been one of the best decisions I've made. So Yield Max, again, just chugging along. It's not exactly hard to understand it. I feel like Yield Max ETFs, the best option is obviously YMAX, the all-in-one. YMAG is also good, but I feel like they're much better now. I'm going to keep more an eye on them because they introduced the ability for them to do call spreads. I've noticed it especially with MSTY. So I've noticed that, when MicroStrategy goes up 10% or 8%, like it's been doing almost every day, MSTY is actually keeping up. It's not going to go up 10% if MicroStrategy goes up 10%. But it's not going up only 2% or 3%. It's actually going up 7 or 8. So those call spreads, I feel, are really helping the returns, which I feel in turn are really going to help the all-in-one YMAX. So I'm definitely keeping my eye on YMAX. Of course, the dream is a lightly leveraged version of YMAX. If that comes out, a 25% leveraged version of YMAX with weekly dividends, now that they do the call spreads, I might actually reconsider getting back in YMAX in my retirement account. We'll have to, we can only hope, right? Moving on to FEPI and AIPI from Rex Shares. This is it. Now we're going more in the niche funds. If you really want specific technology exposure, only technology stocks, I kind of prefer the NASDAQ 100. But if you it's personal choice. If you love technology, you want something specific to technology, you're an income investor, FEPI gives you an approximate 25% yield. AIPI is even more interesting in my opinion. The yield is much higher because the stocks are much more volatile as they're more associated with AI. So you have Palantir, Nvidia, CrowdStrike, ARM, for example, as the top stock. So more AI oriented, where FEPI is more classic tech oriented. So could be great options if you really you're an income investor and you really believe in these AI and technology stocks. You have CLIP, which is basically, there's not much to say on this. It's just a rinse and repeat strategy, right? You're giving up all the upside of KWeb basically for maximum distributions. And I'm assuming that eventually they're going to have to do a reverse split on this because it's just going to keep going down over time because they're doing at the money calls on the whole thing, right? But latest distribution, pretty massive. That makes sense because KWeb has been pretty volatile and I believe those stocks went up significantly. So obviously that helps CLIP in a way. Moving on to Bitcoin and Ether. So you have a YBTC Maxi for Bitcoin. I think the distribution is a little bit lower in the last one. Yeah, 88 cents. That makes sense because volatility is, I guess, lower on Bitcoin right now because it's just going up and up and up. But Ether, very high volatility, very high distributions here on this one. $2.29, pretty high yield. So these are, I would say classic Bitcoin Ether cover call ETFs. If you want those, you're interested in investing in Bitcoin or Ethereum, but you want those covered call premiums, that monthly income, those are good options. You have Maxi as well, for which is managed by Simplify. This is the one I used to have. Obviously it's been doing well because Bitcoin's been going up, but I pretty much switched it out for the Yield Max MSTY, the Yield Max MicroStrategy, because I feel investing in MicroStrategy is kind of like a leveraged bet on Bitcoin. But Maxi has been declaring $1 monthly dividends, and I think they'll probably declare $1 monthly dividends till end of year, and then they'll probably go back to 15 cents. That's just my estimate. Fixed income, my least favorite category, TLTW, LQDW, HYGW. I just, whenever I see the not doing that well. I mean, look at the 1 year, compare that to the S&P 500. I personally just don't understand. I got out of fixed income completely. I don't like fixed income. I'm not going to invest in fixed income anymore. But hey, if ever for some reason you want it, you got TLTW for U.S. long government bonds, LQTW for investment grade corporate bonds, and HYGW for regular corporate bonds. But My opinion, if you own any one of these, I think you're going to be better off, much better off with SVOL, which has fixed income as well. Last but not least, everyone, closed-end funds, which I only want to cover the all-in-one closed-end funds. CEFS, which is part of the grade 11. Just insane performance. I don't know what these guys are doing. I would only hope that they raise the distribution rate because it's only 7.7. I'm sure they could raise it. But the guys at Saba know what they're doing. This is an all-in-one closed-end fund option. ETF, actually, if you want to own it. They have an all-in. Same people have a closed-end fund, an all-in-one closed-end fund that's actually a closed-end fund. And this one's actually trading at a 9.30% discount. So this one could be interesting as well. And of course, you have Riv, which is back on par here, no longer at a discount. You also have YYY as well. These are all-in-one closed-end fund options, if ever you're interested in that. So that's it for the high yield overview. We're just chugging along here. Not massive news, not anything super special on the US side. Everything is just chugging along. I'm very curious to see throughout once a year, once all these funds, all the ProShares one, all the Roundhill ones, the Defiance ones, the BlackRock ones, I can't wait till they're all been out 1 year so we could actually compare. I'm definitely going to make a video comparing all the S&P 500s to one another, NASDAQ to one another, Russell 2000s to one another. So many options now, so many great options as an income investor. Make sure you keep watching these monthly videos. Like and subscribe. I would really appreciate it because I'll always keep you updated on the high yield income landscape. So we're going to do this again next month and see you next time. Thank you so much for watching. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.